Hello, good morning and welcome to ET Now's Buy Now, Sell Now with me, Varun Hiriman, and along with me, Karanya Rao. Let's get a move on and check out the headlines for this morning, beginning with obviously the big AGR case and the telecom stocks in focus. The board is to meet on September 4th for Vodafone Idea. That's going to be a major one and it's going to weigh down on everyone else in the sector. Right now, the Bharti rally might see a bit of a stop if Vodafone is able to raise money. Then, today, a very important Supreme Court hearing. We have the Moratorium hearing, which is going to be up. That interest waiver, highly unlikely that we're going to see an interest waiver on the moratorium loans, but nonetheless, the Supreme Court is hearing the judgment today, or will be giving the judgment today, rather, and then that is going to have a huge impact on all the banking stocks and banking sector. Then moving forward, export setback. Unfortunately, the government has capped the MEIS benefits for exporters to 2 crore per exporter. So that's a bit of COVID gloom coming in right there. Then talking about some more COVID-related gloom, GST mop-up dips. So August collection dipped 12% month-on-month at 86,449 crore versus 87,422 crore in July. One positive takeaway from there is that the rate seems to be improving, at which the GST is worsening rather. So it's worsening, but at a slower rate than it was in the previous months, is what I meant to say. Then switching gears a little bit to auto, two-wheelers are in demand. Hero Motors August sales have risen 13%. TVS Motor on the converse side, 14%. So two major two-wheeler players in India showing a strong, robust month-on-month and YOY improvement as well. And then finally, before Karanya gets us up to speed on all that's happening in the markets comprehensively, earnings radar, Jubilant Food currently trading at a high, which is quite surprising considering Q1 is expected to be a bit of a washout for this company. The poll indicates that SSG could slide as much as 60%, but nonetheless, that's a key one to look out for this morning. Karanya.
Right, these are all the news and updates and headlines that you need to keep on your radar before we proceed the show. But yes, markets largely, being a bit listless, I would say. The Nifty is right now perched at exactly 11,450 levels. The bias is definitely towards the losers, but I think it's better to call it completely flat as we speak, because there has been a bit of an uptick or slight recovery at the moment as well. Nifty right now has jumped to 11,465 levels. Sensex is down about 53, 54 odd points, but the broader markets once again they're back to their outperforming streak. You have the small cap index gaining in the excess of 0.7%. Mid cap index is up 0.3%. If you look at sectoral performers as well, it's Nifty Bank which is down in trade by about 1%. Nifty PSU banks are underperforming big time. Right now the entire index is down 1.8%. You have some weakness coming by for private sector lenders as well. Nifty Realty is also down 0.5%. But on the flip side, what's curbing the losses or what's capping the losses is a Nifty Metal Index, which is up 0.8%, top sectoral gainer. Nifty IT is also looking fairly okay. It's up 0.7%. Some names from the FMCG pack also holding out quite smartly. The index, though, is just logging in some marginal gains. From individual stocks, you have a Z Entertainment at the top of its game and the top of the list as far as Nifty 50 gainers are concerned. It's up 4.8%. Bharti Infratel is up 3.5%. You have a Coal India up 2.6%. They released their production figures for the month gone by. In fact, today they will be coming out with their Q1 numbers as well. So ahead of that, it's buzzing in trade. Bharti Airtel continues its up move, 1.6% higher. Tech Mahindra is up 1%. You also have Reliance up 1%. So has Ultratech Cement. HDFC Life is also looking fairly upbeat, logging in gains nearly about 1% in trade. From the small cap index, especially the outperformers, if you look at it, you have an India Mart which is up 7.2%, sorry. You have a Century Ply 5.5% higher. Delta Corp is looking very resilient. Just Dial, Star Cement, Karur Vysya Bank, Laurus Labs, Kajaria Ceramics, Tata Elxsi, these are the stocks which are gaining in the excess of 2-3% each in trade. So yeah, that's exactly what the market sentiment or the market momentum is looking like at this point in time. largely listless or flat for the benchmarks, but yes, some names really standing out from the broader markets. Let's touch base with our guests on the show. Nirav Chheda is here with us from Nirmal Bank Securities. You also have Gaurang Shah from Geojit. Good morning, gentlemen. Thank you so much for taking time out. Nirav, I'll come to you first for your technical ideas. What are the stocks on your radar?
See, two stocks. One is a breakout stock. The first one is a buy call on JSW Energy. You see this stock, after a brief consolidation, the stock had picked up steam. There's a breakout on the daily charts of a flag pattern. So I believe this stock is now going to go up towards the 65 levels. So at this point of time, buy it with a stop loss of 53 for that target of 65. The second stock is a buy call on L&T. Now, see, L&T is placed around a very important level of the 50-day moving average. That 50-day moving average is around the 950 odd levels. I believe, whenever it's come there, it's taken support and, it has moved up. So I believe one should be buying L&T at current levels with a stop loss of 930. The open interest is also suggesting that this stock might go up. So you can, wait for the target of around 990.
All right, okay. Gaurang, hi, morning. What are your wealth creation bets for the long term?
Thank you, Karanya, and morning to all of you all. So I think the first stock is from the alternative clean and green fuel. The stock is Mahanagar Gas Limited. I think we were just discussing the recovery in the month-and-month sales number for the auto pack. First, we are seeing recovery in two-wheelers. Then I think gradually we'll see three and four-wheelers pick up. Then commercial vehicle, tractor, agri-equipments. So Mahanagar Gas, on fallback of the earning and the commentary, we are quite confident that, especially the thrust that the company is putting towards CDS, that is City Gas Distribution, we believe that consumption is likely to pick up very strongly. And the next 2 or 3 quarters should see significant earnings visibility. Thereby targeting on the stock somewhere close to about 1,200. These are not short-term, medium-term. These are long-term fundamental ideas. So one has to keep that in mind. The next one is an IT pick, despite the fact that you are seeing a stronger rupee and a weaker dollar. But if you look at the IT pack, I think some of the names definitely command a little bit of respect in terms of investment time horizon, long-term, and the stock idea is HCL Tech. Consistent performer Karanya in the large cap IT space, and earnings has been much better than some of its peers. 780 would be the target on HCL Tech.
Okay, thank you for that, Gaurang. Let's now get a move on with our queries for this morning. And I believe we have 2 or 3 that we need to address. So let's begin with Tushar Diochakke, and he's again quite a regular on Buy Now, Sell Now. This is not the first time he's writing to us. He's bought SBI at 167 rupees per share. Should I add more? Please also share views on AU Finance. So, Nirav, let's come to you first. SBI really has rallied from Tushar's buy price. And what do you think? Is it safe to add more at these levels, or would you wait for maybe a bit of a retracement post the Q2 numbers? And let's get over this one first, and then we can ask you more about AU.
See, SBI has witnessed a fabulous breakout above the 200 level. The 200 level was a strong resistance on the upside. For quite some time, this stock continued to remain, in between 200 and about 180 range. Now, since the breakout, I believe the stock is headed upwards. However, whenever such a breakout comes, the stock comes back down to retest the breakout. So, it is likely to come down towards the 205, 200 odd levels. And after that, it is going to head towards the 250 odd levels. So I believe one should be adding the stock, but as it heads lower towards the 205 odd levels. So add-on dips, I believe the stock can go up towards the 250 levels. And, once it goes there, one can book profits.
Okay, thanks for that, Nirav. You know, Gaurang, I'm glad I can ask you this question because what has changed in SBI in the last 3 months except for the fact that 3 brokers have come with a large upgrade, or maybe 4 brokers have come with an upgrade of 300 rupees. Suddenly we're saying, okay, subsidiaries are valuable, the moratorium figure is low, but we knew all this 3 months ago and SBI was languishing at 160. So why now have we suddenly turned so bullish on this particular stock? And given that he's already made a 30% return, is it safe for him to add more, or should he wait for some correction?
So Varun, I don't know about these guys, but we've been extremely positive on 2 public sector banks. One of them is, of course, State Bank of India. And even at 150, when nobody wanted to touch SBI, we remained extremely positive. And this includes also some of the private sector names, because we were quite confident that the moratorium word, which was supposed to be the one which had casted a spell on the banking and NBFC, we were sure that 3 to 6 months could be the time horizon wherein you could see pressure. But surprisingly, the numbers that most of the banks, private as well as public, have come out with respect to moratorium, it has been much within the comfort zone than what our estimates were. And along with that, you have a comfortable feeling with the gross and the net NPA level, provisioning coming down. And the efforts that have been put in by the management, and of course the policy changes with respect to the Reserve Bank of India and Monetary Policy Committee, we remain extremely positive. So even at that point of time when it was trading somewhere close to about 150, 175, we maintained a target of 285, 300. Even as of date, we are maintaining that target after we've seen the first quarter numbers. Second quarter, if there is more positivity, then definitely these targets gets revised upwards. And if you are such a strong bank, I don't think you should write off State Bank of India. So stay invested and use all dips maybe closer to 200, 210, between 200, 210 to accumulate more, given the fact that he's got invested at, I think, sub 170 level. But we are quite confident that this is a great investment idea. Along with that, AU Small Finance. Now, this is also a quite sophisticated play with respect to semi-urban rural India, and along with that, it has got a part of urban loan book distribution as well. So if you have to put a combination of all this thing, and along with that put the backdrop of the earnings, then amongst the microfinance companies, AU Small Finance definitely qualifies as the top pick. So you can average this as well at lower levels and look at least 1.5 to 2 year time horizon.
All right, so it's a thumbs up from Gaurang on SBI. Actually, the same viewer had another query with respect to AU Finance. He wanted both of our experts' recommendation on this one. Coming to you first on AU Finance, if you look at how the stock has performed since its lows earlier this year, the stock has almost doubled from its 52-week low of 360, 370 odd levels. Is it a good idea to enter into the counter at about 700 rupees a piece, or should he wait for some dips and then consider investing?
Karunya, what really happens is generally when a stock doubles or it witnesses a big move, there is a slight consolidation which comes in for for about 4 or 5 weeks. That is what is happening for this stock. I believe it is making a flag kind of a formation after a big move. This is a consolidation zone. I believe once 770 is broken above, only then the stock will again witness further buying, aggressive buying, which can take it higher. But at this point of time, if you ask me, should I add the stock at current levels, I'd say no. It still has about a week or two to go for its consolidation. Let the breakout come above the 770 and only then buy. Or if the stock falls towards the 600 levels, which is a good support area, that is where I buy again.
All right. And Gaurang, what's your view on AU Finance?
So like I mentioned, extremely positive, and it is one of the AU Small Finance currently as one of the top pick amongst the MFC, that is microfinance segment. And this is a classic play with urban, semi-urban and rural India. And if you have to compare the earnings also of AU Small Finance, Ujjivan and the other third one, Equitas, then our top pick is of course AU Small Finance because of the loan book, earning visibility, and of course better understanding of the microfinance market. So I would say that stay invested and use all dips to get into the stock from a longish time horizon.
Okay, well, thank you for that, Gaurang. AU looks like an interesting play as well. I guess we can sum that up from what both the experts have said. And on that note, I think we're done with the queries for this morning. So thank you both you gentlemen for joining us. Let's now get a move on and look at the BNSN stock cloud for this morning. 10 new stocks that are making it in there. While my producer pulls it up, let me just tell you that it's going to be dominated today by some auto names and the banking pack because that's in focus. Now, if it's up on your screens, we're seeing a Coal India, a VST Tillers on the back of some decent commentary coming in, and a JSPL as well. Now, an SPI, Axis and IndusInd, because like we told you earlier, the interest waiver case on the moratorium loans is going to be decided today, the judgment by the Supreme Court. So that's going to keep those stocks in focus. We have a Hero Motor and a TVS Motor, also which we flagged off earlier for you because the August month-on-month sales are really showing a sharp uptick, even sequentially and then even YOY as well. So they're more or less beating or competing with last year's levels. Then we have an ONGC because it's been one of the top performers recently. And then we have an Arvind Fashions as well. So that's the stock cloud for this morning. And keeping it with the market and what's trending, let's go across to Jayesh because he's going to walk us through how analysts have revised their target prices during the month of August. Jayesh.
The month of August was extremely good as far as the bulls are concerned, and even the analysts, revised their target price on their higher side. If you have a look at the total universe of 280 stocks that were tracked by at least 10 analysts, there was more than 75% stocks that were upgraded, while we saw a downgrade for just about 14 stocks, and 6% of the stocks and the target price remained unchanged for the month of August. So clearly in favor of the bulls as far as August is concerned. Now let's have a look at the stocks that actually were in focus and the target price change for the stocks in the month of August, where we saw big upgrades coming in, starting off with Lotus Labs, a more than 50% upgrade for that one. And you had DV's Labs as well, which also saw more than 33% upgrade for that stock in the month of August itself. Remember, this is the latest entrant to the Nifty as well that has been announced. And then you had large cap names like Bharat Forge as well as Z Enterprises, which surged to more than 50% for the month of August itself, also seeing significant upgrades for their target prices. And the stock that went out of the F&O segment, which is Ujjivan Financial, that also saw an upgrade of more than 25%. As far as downgrades are concerned, you had the likes of Indian Bank and Vodafone Idea, which saw significant downgrades. And then you had the Container Corp Shocker stock as well as ENIL, which also made it into in this list, but just about single-digit downgrade for these target prices as well. Interestingly, what we also found out was, these stocks where analysts revised their buy recommendations and sell recommendations significantly. Let's have a look at the buy recommendation changes. So Z Entertainment and DV's Laboratories once again featuring in this list. About 40 to 50% of the analysts that were tracking this stock, had an increase to buy recommendation from the previous month itself. Then you had City Union Bank, Ashok Leyland and Exide Industries also featuring in from the auto pack, which saw about 30 to 35% increase in their buy recommendations. Lastly, looking at the sell recommendations where we had more analysts that turned negative during the month, you had Ramco Cements that topped the list at about 29%, along with Sun Pharma, once again 29% over there as well. And then you had a lot of other large cap names like Balkrishna Industries, ONGC, as well as L&T Infotech, which also saw a 20% increase in their sell recommendations.
Okay, thanks for that, Jayesh. Time for a quick break here on Buy Now, Sell Now. Back with more very soon.
Buy Now, Sell Now on ET Now. With COVID-19 bringing back the demand for pharma, we spoke to market veteran Sailesh Bhan, who anticipates double earnings for pharma companies. He also sees the sector at the brink of a secular bull run. Let's listen in.
Pharma for the last, other than the last, say, 6 months, prior to that, it was struggling for a 3 to 4 year period, right? And we have seen earnings improving for the last 12, 18 months, but markets were not responding to it because markets had become extremely narrow and only a select set of stocks and businesses were doing well. The earnings cycle for pharma is certainly on an uptrend from the low base of, say, 2018 and 2019. And very few sectors today offer this visibility of doubling earnings in a 4 to 5 year period. So that's one. Second is valuations of these businesses were 30, 40, 50, and even 60% cheaper than consumer businesses. Some part of pharma businesses do have characteristics of the consumer space. So I think that correction actually also happened in terms of the re-rating, which was visible to us. More interestingly, I think, like I said, the narrowness of the market is slowly broad-basing. You saw pharmaceutical sector participating. Now you're seeing metals starting to participate. You'll see possibly some other sectors, utilities, which is a forgotten sector in India, starting to participate. And maybe if some good news comes in public sector businesses, you'll have public sector and engineering business starting to perform. So it's more a function of a gap of earnings was there in sector for the last 4 years. That I think has clearly turned because most businesses are now talking about earnings doubling in a 4 to 5 year period in pharma. And valuations, at least what they were about 3-4 months back, were absolutely mouthwatering in that particular space. And that actually is derived or led to the significant change. Also, the weightages in the indices were, ignorable, about 3% weight in the index. People said we may avoid pharmaceuticals because we don't understand the FDA challenges and all that. But I think when you have an outlook which has improved materially, not because of COVID, but because of their own business cycle turning, I think participation also improved materially. So I think such kind of a thing which has happened in pharma should be visible in several other sectors over the next 12, 18 months is my opinion.
Okay, that was quite an interesting excerpt. But Karanya, I believe you've been taking a very close look at the auto numbers and how they've been shaping up both sequentially and YOY. So could you walk us through that, please?
Yeah, that's right. In fact, most numbers, had already come in yesterday during the market hours. The good news is that there is no bad news and there is no negative surprises as far as the auto numbers are concerned. In fact, there's been a sustained uptrend for most of the companies and most of the segments on a sequential basis as well, especially now that we are approaching the festive season. It's been a good demand across the board, across all the companies. If I just read it out, Maruti has logged in about 1.24 lakh units. You had Escorts above expectations, 7,268 units. Even M&M Farm segment actually beat the expectations, handing in about 24,450 odd units for the month gone by. Sequentially, I think barring Escorts, tractors, all of them have shown a double-digit growth. But given how much the quantum has been for Escorts farm equipment, even a flattish sales growth is actually not a bad thing to log in at this point in time. M&M Auto has shown good uptake as well, 30,426 units. They continue to sort of iron out the supply chain issues. Even the management spoke to us this morning and they said that it's largely been eased and most suppliers are working fully operational. There's no issues as such. But yes, some handful of their suppliers are still facing a challenge. Ashok Leyland and Eicher ECV, both of these CV players, as expected, have shown good improvement on a month-on-month basis. You have Ashok Leyland growing 34% MOM and Eicher CV coming in at 2,477 units. A 13% growth on a sequential basis. Two-wheeler makers, again, like I said, it's the rural uptake. It's also the festive fervor. A lot of these, sentimental factors really adding up, and good gains coming in for Hero MotoCorp, which has seen a 15% growth on a month-on-month basis, coming in at 5.84 lakh units. You have TVS Motors also in line with estimates, 2.87 lakh units. Royal Enfield, 50,144 units delivered for the month gone by. It was only Bajaj Auto actually to have delivered the numbers this morning, 3,56,000 units sold in the month gone by. Definitely a strong beat. We were expecting close to 3,10,000 odd units to have been sold in the month gone by. So they've managed to outperform our expectations. So like I said, largely it's looking like the demand momentum very much sustains. It will be, of course, important to see over the next 4-5 months, especially after the festive season is over, how the demand will pan out. We also spoke to Escorts this morning. They posted a very strong growth in the month gone by. We spoke to the CFO, Bharat Madan, and tried to understand if the rural demand will sustain as strongly as it is at the moment over the long run as well. Here's what he said.
Ground are quite strong, so I think what we've seen in the last few months, so the industry continues to give very positive surprises, and we expect the momentum to continue as we move to the festive season months now.
Okay. I was just wondering whether the supply situation has eased now and what exactly is the inventory update at the factory level as well as at the dealer level?
See, in August, obviously, like I said, July, August typically are soft months, so that's why I think there's still some comfort. So I think from the second week of August, we started getting the supplies, which are sufficient now. So I think we are today working on the peak capacity level. But yes, as we move to the festive season and looking at the demand trend now, obviously supply will always remain a constant. So obviously looking at this now next 2-3 months position now. So I think it's going to be a hand-to-mouth situation as you move to the festive season, where the demand is quite strong. So I think whatever we do, whatever supply constants we tackle, still I think the situation will remain tight in the stocking front. So this month, yes, some stocking has happened so that the production was comfortable, which it started now impacting retail sales to some extent. But as we move into the next 2 months, which are going to be the peak season months now, so obviously production will run at the full capacity, and we expect probably the sales momentum to continue in the demand side also.
Okay, so that's the outlook there as well. Earlier on, Mr. Nanda had called agriculture a silver lining to the dark cloud that we're seeing because of the virus at the AGM. So it's very rare actually to see this situation come together, so many tailwinds that actually manage to aid demand, on the rural front. Do you see this being a sustainable trend going forward, Mr. Madan?
Yeah, we think now, like 6 to 8 quarters look like should be positive for the sector. Because if you look at the cycle also, and we've seen 6-7 quarters of degrowth now in the industry, and in spite of the COVID situation, the sentiments have started improving from February, March last year. So there were good green shoots visible even at that time, at pre-lockdown stage, when we actually went into the lockdown. And now I think all the factors we look at in the rural side are positive, whether it's in the monsoon front, or it's in the crop, in the harvest.
Okay, continuing on with the same theme, we also spoke to the management at M&M, and with August PV sales reflecting double-digit growth, Vijay Nakra remains positive on the rural uptick. He also talks about customers moving to personal mobility as India unlocks. Let's listen in.
Yeah, we are very bullish going forward. I think with the challenges that we had in the initial 60 days of lockdown, a lot of that is behind us. Demand is looking strong. And yeah, while there are some challenges of the spread of the pandemic to many parts of the country, which was not there earlier, basis on my discussion with our channel partners, our frontline team, we are bullish, demand is strong, and the month of August has been good, and we are all excited about a good festive season coming up.
Is the larger portion of demand, Vijay, still coming in from rural areas and signature brands like a Bolero, Scorpio? What are the signs that you're picking up from the urban markets as well, if you could highlight that?
Yeah, I think that's a good question. I think we should, as you aptly said, look at it in 2 parts. Firstly, rural, and then we'll come to urban. More than 53-54% of the automotive sales for Mahindra comes from rural markets. And, if you look at the indicators, whether it is, the best monsoon we've had in the last 3 years in terms of the long period average, whether we look at the spread of monsoon, whether we look at the large government spends going into rural, all these, and also, of course, if you look at the sowing of the crop, even the Kharif crop sowing this year is 9% higher compared to the previous year. So these are all positive indicators. And the real measure of that.
Okay, let's shift gears from auto to aviation. Ajay Singh promoted Spicejet's latest payment plan submitted to the AAI has been sent back. What ET now learns is that Spicejet has been on cash and carry mode for the last 1 month and now has submitted a payment plan for its outstanding dues. Of course, it also entails a promise to pay back within a year. Utkarsh joins us with more on the story. Utkarsh, why has AAI rejected Spicejet's payment plan and what essentially was the proposal made by the company?
So Spicejet had gone ahead and given a payment plan to Airport Authority of India of a payment within 12 months of 175 CR of the dues. There will be bi-monthly payments, bi-monthly installments which will be given to Airport Authority of India. And more importantly, they will continue to pay the 60 lakhs they pay every day, at least at this point of time, to fly every day. But as you said, AAI has sent back the proposal. Why has it sent back the proposal? Simply because AAI believes it's too large a time for payment. You cannot pay 175 crores in a period of 1 year, and that's why they have sent it back and they have asked Spicejet to submit a fresh payment plan and a payment plan which is in a lesser time duration, and that is what AAI has sent back. Now, even though our sources haven't written back, have told us that they haven't written back with a specific time frame. What they say is that at least a 5 to 6 months time is still good enough, but an year is a lot of time, honestly, to get that payment done. Now, it's not only Spicejet. Remember, Go Air also is in cash and carry. They also have to submit their payment plan. But their dues are lesser. They are working with almost 50 crores of dues. Spicejet is 175 CR of dues. Remember that if the situation, if the revenues don't increase of airline, there are not only dues with the Airport Authority of India, they are dues with OMCs, they are dues with lessors. There are a lot of people who are debtors, lessors, who are waiting for their payments in the aviation industry and can take harsh steps. AAI has started. AAI has made both of these airlines on cash and carry. Now they're looking for a payment plan. Let's see what Spicejet gives as a new payment plan, and Go Air payment plan is also pending at this point of time.
Okay, Utkarsh, thank you for that very important update from the aviation sector. But let's switch gears a little bit and come back to Jubilant Foods, who will be putting out their Q1 numbers today. Vinny standing by with what we can expect. Over to you, Vinny.
Jubilant Foodworks is set to post its Q1 FY21 numbers, and we are expecting a weak set of numbers from the company. Obviously, due to the overall lockdown situation, the QSR space has been hit the hardest by the lockdown and the coronavirus. Now, let's talk about the numbers quickly. The revenue is expected to decline by around 60%, and we are expecting the revenue only at 380 crores. While in terms of the loss, that's the bottom line, we are expecting a loss of around 53 crores versus a profit of around 74.8 crores on a year-on-year basis. Operational performance also is expected to be weak of the company. We are expecting an EBITDA loss of 11 crores versus an EBITDA of 219 crores on a year-on-year basis. Now, SSSG growth, that's the same store sales growth of the company, is expected to see a decline of 60% this time in Q1 FY21, and this is the second consecutive quarter that we'll be seeing a decline. Surely the lockdown has impacted both these quarters in terms of SSSG growth and overall revenue of the company as well. Now, delivery, which is around 60% of the share, that is what is something we'd surely watch out for in terms of the commentary over there. How have the sales been over there? Are they back to pre-COVID levels? Because there's a huge chunk which comes from delivery for Jubilant Foodworks, that's Domino's Pizzas. So now, obviously, what has impacted this revenue this time was dine-in sales, which is around 35% of the sales, was also, barely there. There were no dine-in sales at all, even up till now. So, that is something we're going to watch out for. Also, there were not many get-to-gatherings. So, how has that impacted the delivery segment as well? And is it back to normal levels? Is something we'll watch out for in terms of commentaries from the company. And all in all, we'll watch out, for overall performance of Jubilant Food and see how their performance is in terms of what the management has to say, even coming up with new innovative ideas for opening up drive-thrus, or what is their strategy there, is something we'll watch out for.
Thanks, Vinny, for that. Meanwhile, amid a listless market, a few sectors which are outperforming. Nifty Metals definitely shines bright from that pack. Gaining in trade quite smartly. Mubina is here to tell us what the latest note from JP Morgan is all about on the metal space. Mubina, take it away.
Well, steel and iron ore prices have definitely been on the up move since March. In fact, we did see week after week, month after month, rebar prices, iron ore prices, or rather steel prices, going higher. But this was mainly in the Chinese markets. The reason being that when China returned to work, they returned full throttle to the extent that their steel production, in fact, even exceeded last year's steel production. That means they required more and more iron ore, and that led to higher prices for iron ore and steel. Now in India, meantime, prices were still down on the low because Indian demand had not yet improved the way one would have liked, because our lockdown was mostly in March and April. However, we seem to be following suit as a lot of steel companies now have taken price hikes. JP Morgan does say that both steel prices and margins have more upside, and that's the reason why they've increased their target prices and earnings across the board. So they're overweight on Tata Steel, Steel Authority of India, NMDC and JSW Steel. In fact, they have a target of 580 rupees for Tata Steel and 320 rupees for JSW Steel. They say that the underweight investor positioning is supportive, and of course they could see continued improvement in demand for India week after week, month after month. And among all companies, the earnings recovery or the earnings environment for Indian ferrous companies is the strongest, and they say material upside risk to their street high earnings estimates.
Okay, thanks for that, Mubina. Keeping it with precious metals, as gold continues to glitter, the RBI floated a sixth tranche of sovereign gold bonds valued at a whopping 5,117 rupees per gram. At such a high valuation, are gold bonds the ideal way or route to invest in gold right now? How much percentage of your portfolio should you invest in gold? On the Money Show, Mubina Kapasi spoke to Mrin Agarwal, founder and director of FinSafe, to analyze the 6th series of sovereign gold bond, if it's worth a subscribe or not. Let's listen in.
Well, certainly you have to keep in mind that the price might have come off by 200 rupees and odd since the last 1 month. But remember, you're still buying at an all-time high. So if you are investing, or if you are thinking of investing in the sovereign gold bond scheme, first and foremost, you need to check what is your exposure to gold in the overall portfolio. Typically, a 20% exposure to gold is recommended, and more than that is not recommended. So if you're already at 20%, then please, I would not suggest to invest more. But even then, if you do want to invest more in gold, certainly the SGB is a much more tax efficient way of taking exposure into gold. But be mindful of the high prices and the fact that liquidity is quite limited. Of course, you can sell through the exchange, but the liquidity is a little limited. So keep some of these factors in mind, that you are entering when the prices are pretty much at an all-time high.
Well, yeah, even if we may be 200 to 300 rupees off, but the prices are still at a bit of a high. So, that is something that you do need to take note of. So, Mrin, you mentioned liquidity could be a bit of a problem, but still, when you take all the other factors, you're still getting the 2.5% annual interest, right? Which maybe a gold ETF or, any other form of gold will not give you. So, when you say that you should put maybe 10% or 15% of your portfolio in gold, would you recommend the entire bit be put through a sovereign gold bond scheme, or again, you should break it up or mix it up between the other forms of gold investments?
Well, I mean, it's always nice to have some amount of physical gold, and everybody wants to have some amount of physical gold with them. But certainly, if you're buying gold as an investment, or let's say to build security, which is what typically people buy it for, I would not recommend jewelry, because With jewelry, you're paying 25-30% as overhead charges, and it's just expenses, right? It's like paying 25 rupees for 100 rupees worth of purchase, which doesn't make sense at all. So even if you want to own physical gold, yes, of course, whatever jewelry you need for consumption, that's fine. But if you still like physical gold, then probably it's better to buy coins or bars. But yes, I would say a majority of the investment should be through the sovereign gold bond scheme.